Good morning, everyone, and thank you for participating in our virtual town hall meeting and Q&A session with TWC Commissioner representing employers, Aaron Demerson. Thank you, Commissioner, for being here. I'm David Setzer. I'm the Executive Director of Workforce Solutions for North Central Texas, and I'm working from home in Arlington. In addition to Commissioner Demerson, joining us on the call today from the Texas Workforce Commission are Tommy Simmons, who's in the office with Commissioner Demerson, and they're practicing social distancing, so you'll see them rotate the computer for if Tommy needs to speak. Also, Valissa Chapa, who's additional counsel to Commissioner Demerson, and Elsa Ramos, also additional counsel to Commissioner Demerson. We hope to be joined by looks like we have been joined by Bridget Moon of the Small Business Administration. Because there are a lot of things that the SBA can do for you employers during this time. She is their Economic Development Specialist and Veterans Business Development Officer. So thanks to all of our participants for spending time with our employers here today. You know, we've never been in a situation like this or faced a crisis like this in our country. And its impact on our lives is unprecedented. It's touching everybody in some way. So we sincerely hope you and your loved ones are safe and healthy. But we want the same for your businesses. The jobs, products, and services that you provide are vital, and they're going to be vital to the recovery of our families, our communities, and our economy. So we organized this call for Commissioner Demerson so that you can hear directly from him as he shares information about the resources available to you through the Texas Workforce Commission and other agencies, as well as answer your questions about unemployment insurance, employment law, payday law, and any other concerns you may have. Before I turn the call over to Commissioner Demerson, I just want to go over a couple of housekeeping items to make sure that this works well. For the attendees on the webinar, your camera has been turned off and your microphone has been muted so that we minimize background noise. You should still be able to see and hear all our guest speakers. And we will begin the question and answer portion of the town hall by addressing the questions that were submitted in advance. And then at the end, what we're going to do is go and I've got staff looking at the chat box, and we're going to try to pick questions that maybe didn't get answered from the ones that were submitted in advance. So, and if time runs out before we answer all questions, and I anticipate that it will, we will post a slide at the end which has that 800 number that you saw a minute ago and an email for the state, and also some contact information for Workforce Solutions for North Central Texas. So with that, I think we're ready to get going, and I'm going to turn it over to Commissioner Demerson.
David, thank you so much for the opportunity. Thank you guys for holding this call and for the invitation to participate. We appreciate your leadership, your commitment, and everything that you guys are doing in this area. North Central Texas Workforce Solutions Office and David and that team, they're the boots on the ground for these interesting times. And in some cases, you're experiencing hiring. In a lot of cases, we're experiencing layoffs. And so make sure that phone is turned off. So experiencing layoffs as well. And so David and that team, to all of the employers on the line, that's an important partner and a resource for all of you guys. On behalf of Governor Abbott and myself, let me just say thanks to everybody that's on this call. The employers that are on this call, you guys are where the rubber meets the road. You're hiring our Texans, and we appreciate the leadership and your investment that you've made in our state, and appreciate not only for what you're doing today, which is very important, but what you've done always, and that's really just taking care of business in a big way. And so the governor appointed me to this position in 2019. I have August of 2019, I have the opportunity to represent the employers here in the state of Texas, and we want making sure that we're doing exactly that. This is, as David had mentioned, unprecedented times, and we want to make sure that we're there to answer any questions that our Texas employers have, and we appreciate the opportunity to do that. We want you guys to have the best information available to make the best decisions that you can. And so joining me on the call, I have 4 dynamic employment attorneys on our team: Tommy Simmons, Valissa Chapa, Elsa Ramos, and Mario Hernandez, who's actually in the office handling the 1-800 hotline calls that we're continuing to receive. But these guys have been answering calls over the past 2 or 3 weeks in a big way, trying to make sure that we're answering in real time, relevant, live information so that you're getting answers to your questions. We have a frequently asked question document that David and his team will share with you guys afterwards. These are some of the commonly asked questions that we're receiving from Texas employers. And I think it's a real good document that you can use if you have questions along that line. In addition to that, we have our TWC website as well, where you're in a position there's a top red banner that has questions and answers and information for our Texas employers and employees as well. The major part of this meeting, we want to get to Q&As and really be in a position to answer your questions. And so I want to briefly highlight some of the things, the action that Governor Abbott has taken and action that we've taken here at the agency. There's no longer a waiting period. The governor waived that right away, where you don't have to wait 1 week. You can go immediately to this. In addition, the work search requirements, those were waived by our executive director at this level. And the governor had requested a designation for the economic disaster loan from the SBA, and we've received that. And we're glad that Bridget is joining us on this call so that they can talk about that program that's available for small businesses in Texas. And we want to make the entire state, the designation was granted, and we want to make sure that we're getting that information out to you guys as well. One important part, there's a shared work program that's an alternative to potential layoffs. And that's a program that if the question is not asked, we'll make sure that we highlight that as well, so that if Texas employers are doing things that are different, David and his team are aware of that program. And we here at the Workforce Solutions Office and Workforce Commission Office are also in a position to assist you with getting information on those programs. We've been very innovative in our approaches. I mean, it's been unprecedented. 1.7 million calls that we received. I think the highest number of calls we ever received were 60,000. And just imagine, the percentages of increase have been phenomenal. And so we're asking for the patience. We just introduced a chat box. It's named in honor of our former executive director, Larry Temple. And it answers questions that are related to UI as well. And that's on our website as well. The governor has also allowed innovative ways for restaurants to sell maybe products or so. I mean, there is alcohol added to the list as well. And just a number of things that we're doing in Texas to try to make a difference for our Texas employers. We've been on the call with association groups, those in construction, those in the restaurant industry, all of those membership organizations we're continuing to try to play a role with, so that we're getting answers to their membership, which are, again, you, our Texas employers. We appreciate the investment that you're making, and together here as Texans, we're hoping to come out of this, but know that you have our full commitment to trying to make a difference. Thus, this call today, if we can answer questions for you, we're going to do that. And even after this call is ended, we're still here for you at the state level to answer those questions as we muddle through what we're experiencing right now. And so, David, thank you. The guys that are on the call, the leadership, the elected officials, the businesses, the employers, we appreciate everything that they're doing. And again, we stand ready to assist in our office to try to make a difference in that regard. And so I'm going to end it there and allow Bridget, or the next part of the segment, but really standing by to answer those questions, those important questions that our Texas employers have in that regard. But thank you guys again for hosting this, and thank you, David, and your team at the local level for all that you guys are doing, because that, again, is where the rubber meets the road, and you guys are in the thick of all of that. So if there's anything we can do, we stand ready to do just that.
Thank you, Commissioner. And Bridget, if we can get your video up and unmute you, if you would like to say a couple of things about the Small Business Administration, and some of the questions are going to be directed toward you as we go through them. So, Bridget.
Yes, thank you very much for having me. Can you hear me okay?
Yes, I can.
Okay, wonderful. basically, we are encouraging people to definitely get on our website, sba.gov/disaster, and get the economic injury loan application started. They have started last week to simplify this process. So for those that applied earlier on before last Friday, we encourage to still go back on and apply under the simplified process because it makes them eligible for an expedited $10,000 in idle funds. So that's the first and foremost part that we want to encourage, okay? There is some time taking to process because our office, the disaster office, is very inundated, obviously, with phone calls and processing the applications. But we encourage not to wait. We want people to go ahead and get that process started. There is the other program people are inquiring about, which is the payroll protection program. That, to our understanding, is going to be implemented through SBA financial institutions that do SBA lending and various credit unions. And that is going to be available April 3rd. Now, the application is on the U.S. Treasury site for those that want to go ahead and look at the application and get a head start on that to submit. We encourage to call the banks that they currently bank with to get either on a list or an email list with them to find out how they're handling that process through those financial institutions for those particular programs through the payroll protection, okay? I don't know, I'm not seeing too many questions on the webinar chat directly related. If anyone has any questions or about the process or any information like that, I'd be glad to address those. I'm looking over here and I'm not seeing. Oh, the website. Okay. Someone asked if they want the website again. They need to go to sba.gov/disaster, DISASTER.
All right. And Stephanie, if you could add that to the screen that we'll have up at the end so that information is available for everybody after the call. Thank you, Bridget.
Okay.
We did have a number of questions come in advance of the meeting, and they've kind of been grouped by category. So the first one is the, kind of unemployment/layoffs. So the first question is, how does Families First Coronavirus Response Act affect employees who have already filed a UI claim due to shelter-in-place orders prior to April the 2nd? And I think the commissioner is going to throw that one over to Tommy.
All right, Tommy, I'm going to let Elsa answer that question there. Elsa?
Hi, good morning. Can everyone hear me?
Yes.
Yes, we can.
Yes. Oh, perfect. Thank you. We did get that. So how does the Families First affect employees who already had an unemployment claim? In my opinion, the Families First really has no bearing on the current claims from these employees. These people were not able to work if they're already getting benefits prior to the effective date of the act. And since it is not retroactive, those people were not able to work. Their claims will continue as regular, and they will continue to receive benefits if they continue to not be working. Now, I'm open to a different interpretation from Tommy, but I don't believe that any current claims are going to be affected by Families First.
Yes, Elsa, thank you. And the only thing I might add to that is, since the Families First Coronavirus Recovery Act paid sick leave benefits are essentially paid leave, and they are meant to fully replace the employee's normal pay, that means that they would be under our rules on pay status, and for the week covered by a FFCRA sick leave payment, they would have excessive earnings, presumably, and be ineligible to draw benefits for that week. However, their unemployment claim would continue on as valid, and it would just be waiting a time when the paid leave benefits might run out, in which case, they'll be once again at leave without pay status, presumably, and then they could start drawing unemployment benefits as per their normal claim.
And if I may add, this law went into effect April 1st. And yesterday, the Department of Labor put out a temporary rule on the interpretation and how this new law was going to be interpreted. It is 124 pages long, the rules that they have set out for guidance. So at this point, I'm apologizing if I am not familiar with all 124 of the pages on that, but we will get up to speed the best we can. In addition, the U.S. Department of Labor is the agency that will be enforcing this. So I do have a phone number if people want to reach directly to the horse, if you will, get it straight from the horse's mouth. And the number to reach a person at the U.S. Department of Labor for questions, and they're available 8 a.m. to 8 p.m. Eastern Time, is 1-866-4-USA-DOL, which is 1-866-4-USA-DOL, which translates into 487-2365. That's 1-866-487-2365. Thank you.
All righty. Thank you, Elsa. Here's another question. How do furloughs impact part-time and full-time employees' eligibility for unemployment?
All right, Melissa, go ahead and handle that one.
Yes, so in the unemployment insurance world, a furlough is the same as a layoff in the sense of no further work is available through no fault of the employee or the claimant. So when you look at it in that respect, part-time and full-time employees who are furloughed may qualify for unemployment because the bottom line is they are no longer performing services for pay. So that's generally how we look at it for unemployment claims. They could be eligible because it's essentially a layoff due to a lack of work.
Thank you.
Thank you, Melissa. How does the federal stimulus package affect UI requirements, if it does at all?
Yes, sir. That's a really good question. It affects it in a number of ways. The primary effect comes from the CARES Act, which is House Resolution 748, signed into law by President Trump late on March 27th, last Friday evening. And what it provides is a couple of different ways for people to get emergency benefits under the pandemic circumstances. And one of them is benefits for people who don't traditionally qualify for regular unemployment benefits. That would be independent contractors, self-employed individuals, sole proprietors, and similar individuals. And they will be able to collect a special form of emergency pandemic unemployment assistance through Section 2102 of that bill, the CARES Act. So, and that, by the way, is easily accessible online in a real easy linked, fully text searchable format at congress.gov, congress.gov, and just put in the search box HR 748 and look at the enrolled version of the bill. And it's got some quick links at the very top. Click on 2102 and you'll find that section. There's also temporary unemployment assistance in the form of an extra $600 per week for anybody who files a valid weekly claim. And that is temporary assistance available through June 30th of this year. But basically, it's an extra $600 that is tacked onto or paid on top of whatever weekly benefit amount the claimant might qualify for. As soon as we get guidance from our oversight agency, the U.S. Department of Labor, on those programs, we will be posting that on the employees and job seekers portion of our website. So anybody who is interested in that should check our website regularly, and as soon as the information becomes available, we will post it on the relevant pages.
Okay, thank you, Tommy. Let's see here. this is an interesting question. Are unemployment benefits being offered to individuals that voluntarily quit their job due to COVID-19?
Elsa, you want to handle that one?
Yes, sir. Trying to get my setup. Okay, here we go. That is an interesting question. So normally, if you quit your job, you're going to be disqualified for benefits unless you can show good cause connected with the work for quitting. We've gotten calls and emails from a lot of employers who say, hey, I have an employee who doesn't want to work, not because they're sick, not because this is prior to the shelter in place orders, not because of that. They just don't want to take the risk. Would they be able to get benefits? Normally, if that's the reason, they would not be entitled to benefits. They wouldn't be qualified for benefits. So the reason that they quit was basically choosing to be at home when there was work available for them. And that was the guidance we had gotten last week from our UI division. Now, if somebody ended up quitting because they were experiencing symptoms or they were sick, they might be qualified for benefits because they're out of work because of the medical issue, but then they may not be eligible to receive benefits if they're not medically able to work. So if the doctor said they couldn't work, they would not be necessarily eligible to receive benefits, even if they were qualified for benefits.
Okay, thank you, Elsa. Here's the one of the big hot buttons for y'all down there. How is the problem of getting through to TWC for UI enrollments and questions being addressed, and what is the timeline for improvement? And I'll just say this is an all hands on deck issue. We are doing things locally to assist the state, but I'll let Commissioner Demerson tell you what they're doing at the state level.
Yeah, and it's similar to you, David. All hands are on deck. And so I kind of alluded to this. We've increased the broadband capacity. We have increased staff. They're working on Saturdays. We're looking at, we have already increased the hours as well, and also working on just innovative approaches in terms of calling later at night or so. But all things have been looked at, and we're making a lot of progress. Our ombudsman line has been set up, and we have determined how we're receiving information and funneling it to the right areas. And so I know we're making a lot of progress. Clay Cole and that team are working over and over. But as I mentioned, the number of calls have just been unprecedented, and we can't overemphasize that. We've not ever seen anything like that. So a little patience is what we're asking for, but know that we're working hard to answer all questions, and we will get back with everyone in that regard. No one will be left hanging in that sense. We're in a position to take care of business in that regard, and we're getting there as fast as we can, and working overtime to make sure that's taking place.
All righty, thank you. And the last question from this category: will unemployment insurance tax rates increase for employers that are forced to lay off employees due to government actions?
So, interesting question because of the way it's phrased. Well, unemployment tax rates increase. So currently there is chargeback protection for taxed employers who have to temporarily lay off employees because of the COVID-19 crisis. So there is chargeback protection there. So benefits will not be charged back to the employers. So that's great news. However, because unemployment insurance compensation is an insurance plan, when all of these claims get paid out, employers who even at the lowest tax rate may see an increase because of other factors that are taken into account when factoring what the tax rate needs to be. So if, everyone might see an increase in their premium, if you will, in their tax rate, but not going to be due to the chargebacks if they were protected under the COVID crisis. Tommy, anything you want to add to that?
Yeah, that pretty well sums it up. The minimum tax rate that Elsa mentioned is the replenishment tax. And right now that's 0.31%. But since that is meant to replenish the unemployment insurance trust fund for lower amounts than the statute calls for, next year, foreseeably, we will see some kind of increase in the replenishment tax and also the replenishment ratio. Those are the two main mechanisms for replenishing the state unemployment insurance trust fund, because by law, it has to be maintained at a viable level so that we can guarantee payment of benefit claims that are filed.
All righty, thank you for that. So we're going to move now to workforce programs. And the first question I'd like to ask here is, could you elaborate on how the work share program works? And have there been any changes to the shared work program benefits, or is there a prorated calculation?
Yes, well, that's a really great question. And I'll just throw in, my personal opinion about this. I think it's shared widely among agency staff. The shared work plan is one of the best and most innovative ways of dealing with unemployment claims that the legislature has ever come up with. It's really ingenious because if the conditions are met, then it provides the best temporary income replacement, partial income replacement of any possible unemployment program. And basically it's designed for companies that have a set of employees who are affected, at least 10 employees, 10 or more employees who have similar reductions in their hours of work. And the reductions are ranging between 10 and 40%. If they meet those conditions and they're in a shared work plan, then they can file unemployment claims, they can earn their wages from the hours they are allowed to work, and then they get the same percentage of their weekly unemployment benefit amount that their hours have been reduced. So if their hours have been reduced by 20%, then they can get 20% of what they would collect if they were totally unemployed. And mathematically, since the weekly benefit amount is about half of what the normal earnings are, that means that with the 80% of their earnings from wages and 10% of their income replaced by the 20% of the unemployment benefit amount, they end up with 90% of their former normal weekly earnings. And that's a lot better than being on total unemployment, a lot better, because total unemployment at best will be about half of the normal earnings, 50%. So shared work plans are definitely the way to go if the employer and the employees can qualify.
All righty, thank you, Tommy. And I've already been notified of a couple of other questions on UI, which we'll get to when we get to the end and pull some questions from the participants. But going a little bit further on shared work, this question: if we utilize the TWC shared work program, will this impact our ability to participate in any of the CARES Act payroll protection programs?
I have to preface my remarks with the fact that the Paycheck Protection Program, that part of the CARES Act, is going to be administered and enforced by the SBA and the U.S. Treasury Department. So they will be responsible mainly for that. But the Paycheck Protection Plan program is there to help guarantee normal wages for employees who are affected up to $100,000 annual rate. And the shared work plan is for people whose hours have been reduced. Now, an important aspect of the Paycheck Protection Program is if the employer maintains the employees on the payroll and maintains their pay rates through the loan that is available under the PPP, then if they meet all the conditions, that loan will be forgiven. It'll be like a grant to the employer to protect those paychecks. To the extent that any employees are laid off or partially unemployed, the loan will not be forgiven fully. It'll be partially forgiven, but not fully. And I'll be glad to let the SBA representative chime in regarding the partial loan forgiveness provisions. But those two programs can work together, but they don't work seamlessly. And we'll have to wait until we get guidance from our own agency, the oversight agency, the U.S. Department of Labor, and additional guidance from the SBA before we know fully what's going to happen with those two programs.
Bridget, would you like to comment on that?
Yes, thank you. We are just getting that information down from the U.S. Treasury Office. So we are directing, because we haven't got the full information as far as all the implementation. But if you go to home.treasury.gov, they have some information on their website currently. And to our understanding, April 3rd is when the banks are going to be ready to administer the payroll protection program. And so that is a separate, again, let me reiterate from last time, that is a separate program than the SBA disaster EIDL loan program. We encourage you to go ahead and apply for both. It does give you information about the loan amounts, how it'll be forgiven. It does state the loan proceeds on the payroll protection program are to cover payroll costs, most mortgage interest, rent, and utility costs over the 8-week period after the loan is made. Employee compensation levels are maintained. There is a payroll cost capped at $100,000 on an annualized basis for each employee. So it does give you some information. We encourage, again, to contact the banks that they do business with. If they do not have a particular bank or institution that does the payroll protection program loans, we encourage to go to our district website, which is going to be sba.gov/tx/Dallas. And on our front page is our resource guide. It's a PDF form underneath our address. And under our financial lending section, which is a green tab section in that resource guide, is a list of SBA approved lenders. Any of those lenders should be ready to be able to administer this program on April 3rd.
Thank you, Bridget. And continuing with small business issues now, could you explain the difference, the benefits available to a sole proprietor available through the CARES Act and an SBA loan? And will there be any restrictions on accessing both resources?
At this time, we're told to go ahead and have them encouraged to apply for both programs. There will be probably something with what we call duplication of benefits. So if you're getting something through the payroll protection program, most likely you're not going to be able to get that same proceeds under the SBA EIDL. They don't want to duplicate efforts. Now, SBA Economic Injury Disaster Loan Program is not there to replace lost profits, but it's also to keep things running. So somebody that might be in business that had lost inventory because maybe their food spoilage, they're not getting the customers back in. You know, that's something the Economic Injury Disaster Loan can look at. Keeping, of course, all the bills paid, you know, accounts payable. Sometimes during this time, people might have had bills they would normally been able to pay in February, but because they had to shut their doors, those accounts payable didn't get paid. So those are things that we're going to look at during the SBA Economic Injury Disaster Loan Program. So that's why we encourage to go ahead and apply for both. And then when they get assigned a loan officer or a case manager, they can explain, hey, I need more funds than what I got here from the payroll protection program, or hey, the $10,000 that you initiated through the SBA Economic Injury Disaster Loan isn't sufficient, and here's why. And then they'll go over any other further documentation that's needed to process that for a further increase for that business. And as far as a sole proprietorship, they're definitely eligible. For businesses that started, you know, prior to, you know, the February declaration deadline or initiation date, those are eligible, whether they've been open for a month or 2 months. We encourage all the small businesses to definitely still apply.
All right, and a related question, if an employer does not yet have funds available through SBA loans or CARES Act, is there a non-enforcement period?
When they mean non-enforcement period, I'm not too sure I understand what they mean on that. I mean,
I think it's in relation to getting a either a loan through the SBA or CARES Act, and will there be any non-enforcement period, I guess, in terms of payback or something like that? I guess that's what the question is.
well, when they make a loan, the economic injury disaster loan, we're doing 12 months first payment. So that's a deferment where they don't have to worry about making a payment on their loan, but of course it's a loan at a very low interest rate. So I mean, it's still enforceable, but they are looking, they're not a collateral lender. A lot of times people say, well, I'm not going to get a loan because I don't have any collateral. Well, we're not a collateral lender. We take best available. Obviously, real estate is something we look at, but we'll look at machine equipment, furniture, and fixtures. You know, we'll look at alternative things to secure the loan. We don't want people to think, oh, I can't apply because I don't have this or that. The biggest thing is for them to get the application in. The loan officer will discuss with them in detail if there's any issues.
Tommy had something to add to that, David.
Yes, David, and very interesting is the fact that regarding the paid sick leave and paid FMLA, expanded FMLA provisions of, of the Family First Coronavirus Recovery Act, the Department of Labor has a special 30-day non-enforcement period for small businesses, and basically for 30 days until April 17th, because the law is so new, they will not strictly enforce that law. They'll do public education, they'll do warnings and so on if needed, but if an employer in good faith is not able to find out about all of the requirements and they haven't implemented the paid sick leave yet, as long as they make it up to the employee, whatever their obligation was during that 30-day period, then there will be no additional monetary penalties imposed by the U.S. Department of Labor under that paid sick leave provision.
Okay, and we received a little clarification on the chat, and it says the enforcement is regarding Emergency Paid Leave Act.
Yes, sir, and that's what I was referring to.
Okay.
There. And where I found that is on the United States Department of Labor website, and you can find that by going to dol.gov, and then the first thing to click on their homepage will be COVID-19 relief. And when you do that, you'll get into a page that has all kinds of links to further resources. Click on the link for employers, and then it's on that page where you'll find the information about the special 30-day non-enforcement period of the Department of Labor. So for 30 days, they give some limited relief or reprieve from penalties until employers have a chance to find out about their obligations and to gear up and start, honoring the leave requests.
Okay, so I'm going to move to our Families First Coronavirus Act grouping of questions. And this first one is a big one, Tommy or whoever is, could you provide an overview of the implications of Family First Coronavirus Response Act and the Coronavirus Aid, Relief, and Economy Security Act?
Yes, sir. I can't recommend too highly the Department of Labor website, dol.gov, click on the COVID-19 link, and then get to the employer resources section of that website. And in there, you'll find the Department of Labor's very helpful fact sheets for employees and for employers, and then a frequently asked question document that answers questions from the standpoint of both employees and employers. Very good guidance, very, in my opinion, very clear guidance, which can be rare from a government agency, but it's a well-written document, answers a lot of questions. So look on that. And then for the CARES Act, the CARE Act, that would be primarily the supplemental unemployment insurance available in Section 2 of that act. And that, again, that's HR 748. And that would primarily be the supplemental assistance for independent contractors and sole proprietors, people who don't traditionally qualify for unemployment benefits, and also the $600 per week additional payments that are available for claimants. Anybody who files a valid weekly claim can get that $600 additional payment. Those are time-limited programs, though. They expire on June the 30th, 2020. And specifically on the Families First Coronavirus Response Act, that would be the paid sick leave, which is up to 10 days worth of their regular normal pay. And that leave pay has to be used before any company leave policy, sick leave pay might be given. That's one of the frequently asked questions. And then the other benefit is up to 10 weeks of extended Family and Medical Leave Act for certain qualifying conditions, basically responding to coronavirus situations. And that would be at 2/3 of their normal pay. There are limits for both of them. The limit on the paid sick leave is $511 per day for a upper limit, an aggregate limit of $5,110. That's for the paid sick leave. For the expanded Family and Medical Leave Act, the limit on that is $200 per day, and in the aggregate, $10,000. So all of that is covered in detail in those resource documents on the dol.gov website. I highly recommend them because they answer all the good questions that employers have.
It's a really interesting topic because you've got these multiple opportunities for resources. You can actually move back and forth. We've been talking about it at work. Our HR department is the expert in our organization. So after the employer has paid the emergency paid sick leave of 80 hours, must an employer pay PTO, say vacation and sick, to all employees, or just those who have requested it?
Melissa?
Yes, so on that question, it really depends on the employer's paid time off policy. So what employers should do first is look to the language of your policy. It's very likely not going to say anything specific about a pandemic, but it is going to say how employees can request leave, how much they've earned, the conditions under which an employer must grant it. If they separate from employment, meaning that they have filed for unemployment or there's no more work available to them, then the policy may address accrued sick or pay or vacation paid leave payouts. So rule number one is to look at your policy, see what your policy says in the event that someone requests the leave or there's no work available. If your policy is silent, which many are, you look to past practice. What could employees reasonably expect based on the past actions that the company has taken? So if the policy says nothing about it and there is no past practice to rely upon, then it could be the employer's choice to pay that out. In my opinion, I think the employer should pay out whatever leave they have available in their banks. And then when that time runs out, the employees may then file for unemployment. Tommy, anything to add?
No, that's pretty well it. It's very important under the Texas payday law because of what it says about fringe benefits being an enforceable part of the wage agreement, that any company that has a written paid leave policy should follow that policy. So once the FFCRA paid sick leave runs out, then any of remaining paid leave should be paid out according to whatever written company policy the company may have. Thank you, Melissa.
All righty. So for employers who were forced to shut down due to shelter-in-place orders prior to April 2nd, how does the paid sick leave for workers affect those employers? For example, some employees have filed a UI claim due to reduced or no hours. Are they not eligible for this benefit?
And I know, Tommy, I think my name is on that question, but if you don't mind, I think it's become clear that as far as the source from our office with the best information on the FFCRA, that's you. So I'm going to punt that to Tommy, if that's okay.
Yes, thank you, Elsa. I think my response on that, even though the Department of Labor is the enforcement agency for this, the take on that I've seen, not only for myself, but also all the other employment law attorneys who have commented on this, is that FFCRA leave is not required until the effective date of the act, which is, according to the U.S. Department of Labor, April the 1st, even though the 15th day after enactment turns out to be April 2nd. For some reason, the Department of Labor is saying it started yesterday. So I think the best and most prudent course of action would be go ahead and provide the paid sick leave under FFCRA starting yesterday for employees who are affected. But before that time, there is no obligation under that law. The requirement to pay it does not come into being until the effective date, which the Department of Labor says is April the 1st.
All right. Thank you, Tommy. And remember, everybody that's on the call will be getting answers to all the questions that were submitted. We got a couple in the chat that I want to get to. Quickly, other questions. How is information about the current job market be obtained? Where is this information available? There's a question about Red, White, and U. So I would encourage you to contact your local workforce center. If you go to dfwjobs.com and look at our COVID response special page, we have all of our links there. There's specific email addresses for each of the workforce centers. So if you're used to dealing with the McKinney Workforce Center, there's a specific email for you to forward questions like that. And earlier there was one on work experience and OJT. That's the appropriate avenue to get questions for that. I want to jump over to a couple of really important questions that came across chat. The first one is, my company has decided to do a mass layoff effective this Monday. The website states the mass claim form needs to be filed 5 business days in advance. Can I still turn in to ease the UI claims for my employees?
Well, I'll go ahead and comment on that. As with most things in life, there is no harm in asking. Even though the official guidance on the mass claims page says 5 days prior, if you have a need, go ahead and make the submission, make the request, and if it gets turned down, then just follow whatever feedback you get from the mass claims department. On the mass claims page, there's an email address that goes directly to that unit. Share your question with them, see what guidance they provide, and then follow that accordingly. That's what I would say.
All right. And another UI question from the chat. If we filed mass unemployment due to shelter in place for only 2 weeks, how can we extend that without interfering with the process that is already in progress?
I personally don't think that should be an obstacle. If a mass claim is in place, if a valid mass claim has been filed and processed, then it can be, extended for as long as the unemployment benefits do not run out. Now, there is a limit on state unemployment benefits. It's 26 weeks, but there may be extended benefits available, and that is one of the sections of the CARES Act. Extended benefits are available, and that is pursuant to an agreement between Texas and the U.S. Department of Labor. but there should be no obstacle if a furlough or mass layoff needs to be extended beyond the temporary period originally envisioned. That would just be a matter of communicating with the Mass Claims Department at TWC and use that email address. That would be the best, most direct route for an inquiry.
Great. And I'm going to go back. I don't see another one posted from chat, but because there's so much in these new acts, let's go back, and here's a question. Explain Division D, Section 602 of the FFCRA, where it states, this section creates a new federal emergency paid leave benefit program. Eligible workers will receive benefit for a month, up to 3 months, in which they must take 14 or more days of leave from their work due to qualifying COVID-19 related reasons. Does that mean they are not capped at 80 hours?
Okay, I'll go ahead and take that one. And, you know, not that I'm saying I'm smart, but I think a smart person knows when to admit they don't know. And I looked at the FFCRA and I did not find a Division D, Section 602 that has anything to do with that question. So what I would invite the person who asked that question is to send me an email. Okay, and the emails at TWC are real simple. It's just the first name dot last name at twc.state.tx.us. So Tommy.Simmons at twc.state.tx.us. Send me where you got this from, and I'll be glad to try to look it up and then, you know, give you my 2 cents worth on it. But I was unable to find any reference in using this information. So let's give it another try via email, okay?
All right. Another question from chat. Sales staff opt in to go, well, I'm having trouble reading this text. Sales staff opt to go commission only and are being laid and go there in employment until they get their first commission check 3 to 4 months from now. That's the way it's on here. So the question is about sales staff and their payment under some of these programs.
All right, that gets into a complicated question about how does a commissioned salesperson properly report their earnings while they're filing claims. And if I understand that question correctly, I think they're asking, how do I properly report, you know, earnings on a claim if I'm a commissioned salesperson and my first commission payment might not be until, you know, XYZ point at some time in the future. Well, what the law requires is that work and earnings need to be reported on each weekly claim. And the earnings mean the wages that the claimant has earned. Even if the wages have not been paid, the wages that have been earned during that week need to be reported so that the benefit amount can be adjusted accordingly. And generally it's an offset against 125% of the weekly benefit amount, but don't worry about the math. The TWC will take care of the math on that, but the earnings should be reported. Now, the question might be, well, how do I determine my earnings? That would be determined by whatever the commission pay plan is. And earnings are whatever the commission pay employee would be entitled to claim if a wage claim existed. So the TWC would look at how earnings are determined and calculated under the commission pay agreement. So I think it would differ from one claimant to the next. It would be a complicated issue, but it could be figured out. But any claimant, of course, who has a question about their rights under the unemployment claim laws, they have an 800 number that they can contact for their representative on the commission, and that's 800-832-2828. 29. That's for the Labor Commissioner's Office.
Hey, Tommy, just to follow up on that question, I think it says, our sales staff opted to go commission only and forego their base pay in lieu of being laid off. Are they covered under the unemployment until they get their first commission checks 3 to 4 months from now? Would it also not possibly bring up a customary full-time hours issue? Meaning if the commission staff continue to work their regular hours, just not getting paid yet, would they even be unemployed for purposes of a unemployment claim?
I'm sorry, I don't see that question. Because
It was
it's
in the
not
chat.
on our printout. It's in the chat box. Just a
It's
moment
the
while
same one
I,
you were referring to. It's the same one you were answering.
okay, let's see. Okay, our sales staff opted to go commission only and forego their base pay in lieu of being laid off. Are they covered under unemployment? Okay, well, if they're working and earning money, I would say that they would probably not qualify as unemployed because they'd be working and they would be earning money and they would have to report their earnings under the commission pay plan.
Right.
I just don't see that would be an easy proposition for them. If they're working, if they're doing their full-time sales duties and they're earning money, they would have to report those earnings on the claims. So
And that was my take on it too, that they may not be unemployed if they were still working their commission job, but just getting paid 3 to 4 months later.
that's correct. Yeah, so based on that, now that I'm reading the question, opted to go, yeah. Of course, now keep in mind that we cannot give rulings on behalf of the agency. The only way that a claimant or an employer can get a ruling on a claim is for a claim to be filed and investigated and ruled on by the claim investigator. And that ruling is subject to appeal to the appeal tribunal. That decision from the appeal tribunal is subject to appeal to the 3-member commission. So individual, commission employees like Elsa and myself, we cannot, rule in advance on a claim that might not even have been filed. This is a potential situation, but my take on this is these individuals might not even qualify as unemployed, but that should not stop them from filing a claim. Just because someone in a commissioner's office says they probably wouldn't be eligible, that is no reason for them not to at least try to file the claim.
Okay, thank you, Tommy. One more question, and then we're going to go to Commissioner Demerson for some closing remarks. And this is an important one. If an employer filed a mass UI claim for their employees, do the individual employees also need to file a claim with TWC? That one's in the chat. So a business filed a mass claim. Do the individuals still need to file their own individual claims?
No, they just need to, the employer will facilitate the claim filing process through the mass claim unit. So the employer should follow the instructions from the mass claim unit, and that will take care of the claims for their affected employees, the people who are included in that mass claim. The mass claim filing will include names and social security numbers of all of the participating employees, all the people who would be in on that mass claim, but they won't need to file their own individual claims on top of that. And
that will be important to keep unnecessary calls from going into the UI center. So that's an important topic. So,
yes, I agree entirely.
Yeah. So, Commissioner Demerson, we're at the end here. I want to thank all of our participants today and our businesses that signed up and sent these questions in. Again, we'll be responding to all of them. So, Commissioner Demerson, you get to close us out.
I'll close this out. David, thank you again so much for the opportunity, and thank you guys for what you're doing. All the businesses on the line, I want to overemphasize our need for you, our prayers for you, and thanks for what you're doing day in and day out. I know that Governor Abbott has us in these positions to try to be as effective as we can. And to the team, Melissa, Elsa, and Tommy, they're here, and Mario answering the calls right now. They're here if there are any other questions. But David, thank you guys. The rubber meets the road at the local level, and we appreciate what you guys, and don't take you guys for granted at all. And if we can be of any assistance or service. We want to provide legendary customer service to try to make a difference in that regard. So thank you for the opportunity, and we look forward to receiving any additional questions and getting those back to you to be responsive as well. Thank you so much.
Thank you, Commissioner. And to our people online, there'll be a information slide that we will put up, and it'll stay there for a little bit, so you have plenty of time to copy that information. Thank you, everybody, for participating, and I think this is a really great opportunity to get some information direct from the Commissioner, direct to our employers. Thank you all.
Have a good day. Stay safe.
Thank you.
Thank you.